Welcome to Urban Hood, your learning platform. Urban Food Alliance is a 501c nonprofit which reaches out to the needy and the homeless who need warm, fresh cooked, nutritional meals. Urban Food Alliance services the needy in our neighborhoods.
As I mentioned, we are a nonprofit organization. Our parent organization is Urban Food Alliance, where it feeds the needy. We are located in state of New Jersey, the central in the Princeton area, and our nonprofit organization, the sister organization is Urban Hood, where the education focus. We focus on education. And if you decide to be a member with us, there are three things you can look at on Urban Food Alliance urbanhood.org website. You'll see the different tier of membership based on your need. You can get help, but at the end, all the members get education, and once you have the education, the knowledge, that knowledge helps you to achieve your financial freedom you're looking for. And as you start thinking of doing a trade or investment, that you need to have some extra edge. That's what you get being part of our community. We use the paid services contents, and with that paid services contents helps us to not only grow our money, at the same time pass that the information along to the community, so everybody can get benefit from it. And at the end of the day, we are all learning and growing together, and becoming successful as a team. That's the support comes in along. So together we learn, we protect our hard-earned money. So and the money we generate for the membership and other classes, what we do with the volunteers, these are the things we do weekly basis here in Central Jersey. And this is some of the things that you can see that, okay, what's the typical box size. Typical box costs us around $50-$60 range, as we can, and every week we do around 100-150. So to some week we go over 150 to 170 boxes weekly basis. So at the end, the money we generate to support our cause, nobody gets rich, nobody gets a benefit from directly from those classes or being a member. Together we help the community. So here it gives you some idea, and also some of the things is coming up the class and why you should be joining our community. Here you can take a look at it, and please join our community. We have multiple tier of membership with as low as $25 per month, up to $100-$150. And I have many times people come in that say you are doing too cheap. We are not here to make money just to grow, just charge a ridiculous price. We are here just offer something, so it not only helps you, it's affordable for you, at the same time it helps the community. Okay, and the classes coming up, there is many you see that there's classes starting. The links are also here. All the classes going to be starting from next week. Honestly, next week or following week, you'll see that we have over 10-15 hours of on-demand training plus in person. Everything is going to be virtual. So you are welcome to take any class and with your own schedule. If you miss any of those in-person classes, you will have access to the recordings also. So this way that you have no excuse not to learn. So you know exactly what you're doing when you do your investment. Now that part is over, and I'm going to go to this. Let's talk about the market. So before I pass it, the way this thing is going to happen, just know that I'm going to just quickly give you overview about the economic event going to happen this week, and how that's going to affect the market, and hopefully is going to give you some idea what's coming up. And then when those who's looking at ticker, what happened, at what point that you should be a little bit careful. So here, this is a weekly calendar for this coming week. From here, by looking at it, Monday, first of all, that's holiday. Many people are confused. Is this going to be stock market going to be open tomorrow? But it's a federal holiday. During Columbus Day, banking system is going to be down. Bank is going to be closed. Banks and the federal offices and the other things is going to be closed. However, the stock market is going to be open. So tomorrow, just like as usual, stock market is going to be open. So and then future already open. That some of you may already see what's happening to future. We'll get back. So as far as the big events on Monday, there isn't anything on Monday that's like alarming. But before we go this Monday alarming event, you know what happened? And some of you may already watch the video. Those who joined last week, you saw. So Monday market was when president was on COVID, and then he heard that okay, he's coming back, getting called. The Monday market did not go when the market did not know what's going to happen, and the whole discussion about our stimulus package was going south. Market kept going down. Monday, Tuesday did not market move much, but as later on, this is discussion coming in, and Wednesday, Thursday, Friday, that new stimulus package going to come in. Boom, boom, markets kept going up and up, and hence you saw that it's a bullish market. Now, this weekend, over weekend, that there are tweets went out and a discussion happened. The president went to go big and just the number he was going after, and then Nancy Pelosi, and the other party is left and right is going after different number. At the end, Pelosi is not happy with the number that is coming, so there is no true negotiation happen. We do not know what's going to happen, but same time, be very careful. Market is so up, just thinking, okay, it might go have the package, stimulus package, hence, it's ready to go push up all-time high again. NASDAQ, S&P, Dow, all of them are ready to go all-time high, assuming that this conversation is going to go up, and stimulus package is coming up. You know that how volatile market is, and the election conversation, all this happened. Just any bad news happens, any of this thing going to go down, you don't be afraid the market can go down the other way. Just be ready for it. That's what I want you all know, that there is that no one can predict. When I say no one will be able to can tell you exactly what's going to happen, but be careful. So as far as the events, Monday, so it's a good, nothing is really going to happen. Tuesday, if you look at it, CPI and core, that's something is okay. Keep an eye on it, but it's not going to be changed too much with the market. But it is something that on Tuesday morning, if you hear, okay, what happened, this is the number they're looking, it doesn't go, it might have little effect to the market. As far as on Wednesday, this RBA government law, employment change number, unemployment, this is as usual, it's all Australia. It's not in our country. It's not going to make a huge difference. Thursday coming up, the discussion, unemployment claim number, that's the number to keep an eye on. This is what happens is again in the morning to see, based on what we have seen, that it's not going to have a ridiculous, the market goes too much down. But big day things is those who is retail investing in Amazon and Target, Walmart. This number is going to be the retail sales number. This is huge. So this coming week, based on that number, you can see that if some of those retail, are they going to go all-time high, and then you see that some of them already targets and others are all-time high, it might have a chance, to go again all-time high. But this is that's something very critical to see in cyclical market and retail market this coming week. That's what I wanted to share. And then as far as going over some tickers that I have, I prepared, I'll see at the end, after a few speakers I have lined up with, and once they share their thought, I might come back and go over some of the tickers that this coming week that I am looking at. You can also think about those who is looking to trade this coming week. This is how it's going to be ordered, just since we have multiple speakers. First, Chandan is going to give you some overview of the earnings. As you know, the new earnings is starting this week, so Q3, and starting with the banking, and then it's going to go all the FANG and then the big tech and then so on. same cycle of what we have seen is happening, right? So Chandan is going to share with you that some earnings and what he is looking at and some of the ideas for you. Then Steven is going to be share with you some of the things that he's looking at this coming week. And then at the end, I'm going to come back and I'm going to share with you that some of the tickets that I prepared and just go over with you so you can at least consider those. Okay. So let's, Chandan, floor is yours.
Thanks, Mushi. A great start. Let me share my screen. And let me know you're able to see my screen.
Yes, we can see your screen, Chandan.
Yeah. Before I go ahead with earnings, I just want to make a quick announcement. We do have planned a Texas meetup in Dallas. The intent here is to meet and greet with folks who are local here, and basically this is an idea to know know about others locally who are part of the group. Either you're not part of the group, you can happily invite others who want to know more about stock market. So this is a great networking event. I want to make a keynote here is we are not trying to sell anything here. This is definitely like a knowledge sharing session where like-minded people come and sit and chat. We are doing this in a park. It's an open event. It's an open space area. So we are definitely taking precautions to keep at least 6 feet away from each other. So this is definitely taking social distancing, and masks are highly recommended. I'll be wearing a mask myself, and hoping others to wearing masks as well. So please do take this advantage if you want to network locally. And this is a pretty popular park in the North Dallas area. And there's a lot of coffee shops just like 0.3 miles away from the park. And this is easily accessible park if you're coming from DNT or something like that. So this is a nice place to hang around. So just want to give a shout out, like if anybody interested, please do come here and accept the invite in the meetup, because if you do not accept and you come over, we can't plan the number of people. So please, if anybody is willing to join, please do accept, so that let's say, for example, like 40 people show up, we might just have to look for a place where we can maintain the social distancing. So long story short is definitely take advantage of this.
Thank you, Chandan. Yes, guys, please do that. This is how I guess you not only get to know the local folks, at the same time it creates that bond, and is good for the community and good for us, for all of you. All right. We have done
Yeah.
many times in New Jersey, so people kept asking, you guys are doing it New Jersey, New York. We have done Maryland, Virginia. So we are doing now locally in Texas.
And this is a free event, so there is no entry fee or anything like that. If people are thinking something like that, so it's totally free. That
Yeah.
being said,
Hey, Chandan.
sorry.
Yeah, Vijay. This is Vijay. Yeah,
Yeah,
thanks for
sorry. Go ahead,
sharing.
Vijay. Yeah.
Yeah, thanks for sharing that, Chandan. So, as most of we have been doing these events, meetups. So we are also doing, Chicago in the same weekend, and also, watch for the next cities that are, coming up: New Jersey, Los Angeles, Atlanta. So we will be doing the, meetups. Yeah, just wanted to.
Great. Thank you, Vijay.
Yeah.
Okay. Go ahead, Chandan.
Thanks, Vijay. Yeah. So to start talk about earnings, this is a very, very important week. This is the start of Q3 earnings. We're starting with banks, which everybody is looking at. So the way how the earnings come up for next week will decide the way how the market moves after next week. So definitely, guys, keep a key note on what's happening and how the earnings are coming up and how the stock market is reacting. This is a real test for the economy for this earnings. So this is this will test the market. Like, okay, they have banks have all the low interest rates. How are the banks performing in the low interest rate? How did the banks perform in a complete end-to-end pandemic scenario? So there's so many things that these earnings will tell. To start with, the first one, JP Morgan Chase. This is one of the key banks, one of the largest banks all over in the world. So this is a major thing to look around. I'm kind of bullish on JP Morgan Chase because JP Morgan Bank has different sectors. One of the sector is the investment banking, where the trading, public offering securities happen. That sector has been performing so well even in the pandemic. So they've been actually beating earnings every time in last quarters, even though with pandemic. So if you see the Q2, they did beat the earnings. So the JP Morgan will set the tone for other banks. That's about JP Morgan. One second. The next earnings I'm looking at is Citi. I'm kind of little bearish on Citi because Citi recently had to do some restructuring and they had some fines that they had to pay. They did some wrong transactions. So Citi is still struggling and trying to cope up in the short-term basis. But definitely in long term, that's a definitely good stock to own. The other good airlines that we have is Delta. Delta will set the tone for other airlines. So with the traffic being, the people started traveling, not a lot, but at least few. So the most important thing about Delta is what is the guidance that they're giving and what is their balance sheet looks like. How are they performing? Those are the key parts of Delta. So that is also a very good earning to watch around. BlackRock has been doing amazing recently. So BlackRock has been beating earnings, and that's a great stock to have in your portfolio. They give good dividend. If you see the expected earnings was somewhere around here, the actual earnings is way above that. Even like in Q1, the expected earnings and actual earnings. So I'm very bullish. The reason the BlackRock is a good company to invest in is because they are not more like a bank. They are more like a 401k portfolio management company. So because of a lot of people who wanted to move funds, every time when they move funds or something like that, a lot of companies do use BlackRock. So these folks have been very busy and they've been, doing really good because there's a lot of companies who changed to BlackRock recently as well because they have a good reputation on the kind of funds they offer. So I'm very bullish on BlackRock. It's been beating earnings every time. And the good part is the IV is less for BlackRock. So if you want to buy calls, not just for the earnings, but in long run, you will not be paying a lot of money for Vega or implied volatility. So that is a good thing. Just as a stock itself, they pay a very good dividend as well. So this is a good stock to have in your portfolio. Next one I'm looking on Tuesday morning is Johnson and Johnson. This is a very, very good company, fundamentally strong. They've been doing COVID trials. I don't have much information on COVID trials, what's going on. But in general, people are looking at their guidance, their revenue generation, what they have in the pipeline, those kind of things. So usually Johnson and Johnson does not have a lot of variation after the earnings. So maybe a few percent here and there, but I never seen J&J going like a 10% or 5% after earnings or before earnings. So this is more like a stable stock. That is what I'm looking on Tuesday morning. Those are the key things. Going on to Wednesday, whatever happens on JP Morgan will set the tone for Wednesday for Bank of America. So if the JP Morgan or basically Citi and Bank of America are more like have similar kind of banking structure. So you might want to see how Citi does the earnings. You can expect something similar with Bank of America, but these guys will set the tone for Wednesday. So if the JP Morgan and Citi do good and the stock goes up, people will start loading Bank of America because they'll be expecting it to the same. The other good one I'm looking here is Goldman Sachs and PNC Bank. Goldman Sachs has been doing really good. They're more like an investment banking. And if you see last earnings, they did really good. So if you see the Q2, the expected was somewhere here. Actual was somewhere way higher. And if you see here, they did really good the day after the earnings. It went up really good. So this is a very good one for anybody who's looking to say, I want to buy some stock before earnings and just get some value out of it. People are expecting positive on Goldman Sachs. PNC Bank is also a very good bank. This is morely based on the East Coast area. They pay good dividend and they've been doing consistently well. So earnings on Tuesday set the tone for these, but Goldman Sachs is going to react independently of the other banks because the model that they have and the investing that they do, they've been doing really good even in the pandemic use case. So this is more like a trading company. So it's really good to have. The US bank is going to have similar to Bank of America, Citi, or something like that. But as everybody knows, even JP Morgan, Warren Buffett has a stake on this. So this is another good bank to watch. Next is Infosys. Infosys has been doing recently very well. I forgot here about Wipro, but these two work, go side on side. Infosys has a big market cap and more number of customers. And Infosys is a debt-free company, and they've been doing well recently, even in the pandemic. They had a lot of projects that they got from the US clients, and they've been performing well. So in any earnings, there's at least a 7%, 5 to 7% highs that I have seen in the stock price change. So this is something to watch around. On after close on Wednesday, another one we have is United. United will follow Delta. I mean, whatever based on how Delta does, United is going to replicate that at least based on how it looks like. I just want to show you the chart of GS. GS, if you see on a weekly basis, it's already turning like it consolidated for a while. So it already formed a marching soldier here. So it is really waiting for a direction. If the earnings come out well, it will at least go to at least 227 is at least that we are looking at. That will be the minimum that it will go to, and depending on how good the earnings are. So the chart looks really good for Goldman Sachs. So the moment they do earnings, it consolidated for a while and it is waiting for the direction. Once it is positive, it will keep flying. So you definitely want to watch Goldman Sachs. That is something I just want to let you know. On Thursday, what I am watching is Morgan Stanley. Morgan Stanley does very similar to what Goldman Sachs does. But if I compare both of them, I'm more bullish on Goldman Sachs. I'm little neutral on Morgan Stanley. But that is something, if you're interested, you can watch this one. Next one is Charles Schwab here. Charles Schwab is doing merger with TD Ameritrade, and it is coming to closure. So anything that they announce about the merger, about when it is closing and what's happening, that can be kind of a good catalyst for Charles Schwab as well. So definitely want to keep and watch. The most important earnings I'm watching apart from banks here is Intuitive Surgical. I don't know how many people know about this company. This is the company which had the first end-to-end automated robotic operation surgery. They have the FDA approval and that product is already in place. This is a very, if anybody is looking for a growth stock, apart from tech stocks that you want to have in your portfolio, this is a very good company to have in. So if you see the chart itself, it's a very healthy chart and it's been doing really good over the year. If you see, it's always above the moving averages. It's trying to be the upper part of Bollinger Band. Every time it came down, it was just consolidating. It's a healthy pullback. So I'm very positive on this earnings. And if there is a dip, I would definitely take this opportunity. This is a very good growth stock. As I mentioned, they have automated robotic surgery, that machinery that they provide. And this is the only company in the whole market which has that. So it has a unique selling proposition, something like that. Next we have on Friday is Ally Bank. Ally Bank has a good business model. They have their costs are very less. So they try to stand out away from the other banks. They're not like regular Citibank or Bank of America. They try to reduce their costs. So this is a good one to look as well. BNY is another good bank. So this bank has a lot of something like BlackRock. They do manage a lot of big portfolios. They provide HSA accounts, those kind of things. And even Warren Buffett is a good investor in this. So I'm kind of bullish on BNY Mellon. I mentioned BlackRock, and Goldman Sachs. So those are the ones I'm looking at. I did not see much change in the Citizens Bank, and these are like kind of mid-scale banks. They don't have much to offer, but it is kind of going to follow the trend of how the other banks do. Schlumberger is anybody who is owning oil and gas in the services industry. This is a very good one to watch. Schlumberger, Halliburton, they all go side by side. So based on how Schlumberger performs is going to set the trend for other oil and gas services companies. So what it means is it's not the Chevrons and Exxons. They are the actual manufacturers. These guys they provide the machinery to dig the oil. So they have been like taking a very huge hit recently. So the Halliburton is going to be parallel to that. It went to 50-week low and it's still struggling below the moving averages. So this is a direct competitor of Schlumberger. So whatever Schlumberger is going to give, it's going to affect this one as well. So I'm kind of little bearish on the oil stocks right now because these guys don't have, I don't know the symbol of the Schlumberger, but these guys were not doing a lot of operations. That kind of sidelines because there's everybody already has a lot of oil in the market, and there's very few digging that is happening right now. So I'm kind of little bearish on Schlumberger, but you never know what it is going to surprise. Just on the time check, Mushi, are we still good on time? Do I have a few minutes or?
Yeah, if you have anything else to add, yeah, you can share a few minutes. Go ahead.
Okay, I'm looking at a few stocks next week. I'm looking at Amazon. So our weekly chart looks healthy for Amazon. If you see, it did broke this trend on a weekly basis, and the Amazon Prime Day is next week. So I'm kind of at least little apart from the news, at least from a technical standpoint, this looks a little bullish to me from a Prime Day standpoint. So I already took a trade last week, so I'm hoping it to be bullish next week. I did some rollover, but I'm still in the trade for Amazon. So this broke this trend, and the Prime Day event is at least going to, I'm looking at least at 3,300, 3,350. If the market supports, I do think that that is still possible for Amazon. Apple. It's both bulls and bears are constantly fighting. If you see, I already draw some trend lines on a weekly basis. It did broke this downtrend. It's been struggling at this level to break this level. And after hours, it already went to 118. So you have to look at both directions. So the Apple iPhone event is going to be a catalyst. At least what I'm expecting is it's going to be a little better than what they did last time, because this is a 5G phone and they are the first ones doing in the market. So what it means, what I'm trying to tell is people who are going to be bullish on this are they're going to bake in the Q4 earnings as well, the Q3, Q4 earnings of the iPhone sales. So if you think that this is going to be a huge hit, this is a good opportunity to enter. That's what I'm looking in Apple and Amazon. Those are the two tickers I had in my mind. That's all. I think I covered most of them, Mushi. If anybody has anything to share about earnings, this is a collaborative session. I'll be very happy to learn from you guys as well.
Thank you, Chandan. So, for the time interest, what we are going to do, we are going to wait at the end to have a few questions. But for now, I just want to have everyone know, please be very careful with the earning. It is very hard to make money during the earnings time. If you are looking for long-term investment, this is the time. Also, sometimes you can get in. And if something doesn't go right, you'll see your favorite stock might go down, pull back, and watch the pullback. Depending on the timeline, 1 day, 2 days, 3 days in a row, you go down. Then once it settles down, you can buy it and add it for the long term. Okay. Just be very careful for earning play. Now, Steven, next is yours. So if you can share a few more minutes about this week ahead, what you are thinking, and then
All right. Yeah. Yeah, sure thing.
Mhm.
Okay, so yes, I guess we are heading into earnings season. That's definitely something that we got to be careful about and look at, because that is actually the last earnings seasons of the quarter of the year. So starting off, I guess, with tomorrow on Monday, I guess a few things actually to be looking at to watch to see how the market is going to start at the beginning of the week. One of the things that we have to see or kind of watch very carefully is the actual stimulus deal developments. So we know that they actually passed the original stimulus, but now we are actually looking to see if how much it actually respond and react to the markets, given that the market can actually keep trending up higher even without a stimulus. Because the thing is that a lot of people don't realize is that the market can continue to keep pushing higher regardless stimulus or not, because of the fact that the market is a judgment of large companies. So you're not looking at just it doesn't really kind of gauge the smaller companies, because of the fact that small companies are not publicly traded. So that's the reasons why it works in that favor. So there will be some stocks that will continue to keep going higher, with the stimulus, and there'll be stocks that will continue to go higher without stimulus. So it comes really down to being able to just look at what stocks that you actually want to be in. That's going to be able to help you out, and understand about those. So now, another thing that we have to look at too, that's actually pretty big, is actually the merger update. Usually we have Monday mergers. So one of the mergers that we're looking at right now is AMD and the Xilinx merger. And of course, as we know, AMD has been an amazing performer. So that's how to look at. I probably know if AMD is actually looking to merge with Xilinx, Xilinx will probably be the one that will be able to pop, and it's going to be going higher. And talk on other mergers, there's also been talks about Exxon and Chevron possibly merging. Now, I know some of you guys have actually mentioned and covered about oils, but for me, myself, I'm personally very, very bearish on oils. I really do not like oils right now. And one of the gauges that kind of has me looking at that is mainly when I look at between Exxon and Chevron, because Exxon at one point in time was actually one of the largest and most valuable companies on the planet at one time. And it doesn't really make any sense where something like that, now when you look at something like Chevron, which now, of course, modern days has the best balance sheet and is actually the best one, the chart one looks terrible. It's if the Chevron chart is looking bad, then you know that Exxon and many other oils is not good to be in. So I am definitely not an investor in oils. I definitely agree with what Shana was saying before. So stay away from the oils. And then, of course, kind of piggyback on what we were talking earlier about for the rest of the week. We actually do have big banks. So this is actually a huge week for the banks. I am also very bearish on banks as well. I'm not a big fan of banks. Reasons why is because with the Fed saying that they're going to keep interest rates low until 2023, that's going to tell me that they're going to keep rates low for a long time. And guess what? We might actually benefit by having low interest rates, and we can actually get mortgages, or we can actually get loans for much lower, but it doesn't work to the favor of the banks. So for one of the banks to do well, they would actually need to have interest to go much higher. So I am definitely bearish when it comes down to banks overall. Like I said, we have Citibank that's reporting on Tuesday. We have Bank of America, Wells Fargo, Goldman Sachs is also going to be reporting on Wednesday. And of course, lastly of all, Morgan Stanley, which will be on Thursday. Of course, the other news with Morgan Stanley too is that they actually merged in board of E-Trade. So yeah, they're actually moving over, and a lot of these companies are actually merging and pulling together because it's not making it. So you're going to see a lot of companies, and especially like when you talk about some of the restaurants, some of the I guess the fine dining, some of the bars. Those spaces are not good to be in, because it's just that, with the virus going on now and the winter season coming around, there's going to be probably a second wave of the virus. So you want to kind of stay away from those areas. But, you can actually stay
with certain areas within the food industry. For example, you want to be in like a Chipotle, you want to be in like maybe like a McDonald's, might be even a Domino's Pizza. Those are my recommendations to try to kind of tap into, because of the fact that they actually have drive-throughs. So because of drive-throughs, those are almost like contactless. So, they kind of move toward technology, and that's what makes them very good places to be in versus some of the other small mom and pop type of places. So there's going to be a major shrinking of a lot of these smaller restaurants. But when it comes out to the end, the only last man that's standing are going to be pretty much the larger type of chain restaurants. So that's what we're looking at. And I love Chipotle. Also, when it comes down to the food space, I also got into McCormick recently. I know I just got in just for the dividend. So I'm looking to get that dividend payout. And of course, you're going to notice a lot of investors are going to pour more into some of these other plays that give high dividend yields, because of the fact that the interest rate is going to be staying low for a very long time. So what I'm looking at for the rest of this week is, the very important thing is just to really watch how the banks are going to react, because if they don't do well, I am expecting to see a really rough week for the rest of this week or so. So I'm expecting the markets to actually go down for this week. So what I wanted to share and to show, to make a little bit of sense for you. So Mushi, can you actually, I guess, enable my sharing for me?
You are. You can share.
It says I'm disabled right now.
Which connection you have? More than one connection? Let me see. Keep talking. Do you have one? It looks like you have more than one. Steve.
Yeah, I just I know last time I almost lost the connection, so I just want to make sure I have the two connections for you. So yeah, so what I wanted to bring up.
Yeah, you
was
go ahead.
I have it right now. Okay.
Yeah.
Okay, let me see if we can start that time. Okay, great. All right. Can you see my screen now?
Yes.
Good?
Yes.
Okay. All right, great. So as many of you guys know, I'm actually a very big fan, follower of the VIX. So what I'm looking at right now is I'm seeing the VIX trading between 25 and 30. So because last week we actually had a nice little rally for last week, and I believe we got a little bit north and positive for a year when it comes down to the S&P 500. So we actually had a good week. So what we're looking at is it's almost like a ping pong effect, where we're actually seeing the VIX bounce back and forth through this little channel over here. So because it ended on the highs for the markets, as we know, the VIX is actually showing us that we're actually the inverse. So right now it looks like the VIX closed exactly at 25. So because of the banks and that we're heading into really high volatility, I expect it just makes sense that the VIX is going to start moving right back north up to about 30 again. So if that's the case, then that's kind of the proof that I'm going to show, saying that, I think we're going to see a little bit of a pullback for this week or so. So that's the range I'm looking at. So, I guess for to election time, I do see that we're going to see an increased volatility. And of course, the future is actually showing that volatility is actually going to be spiking up until the election time. Now, the election time is actually one of those times where it's going to be a lot of uncertainty. It depends on, what president is actually going to win the elections. So because of this, we're really in a very tricky situation. And that's why I don't believe in just buying most stocks right now until we can get through and pass these elections, because the markets are actually going to really respond and react, given if Biden's going to win or Trump's going to win. Now, as we know, if Trump does win, that's actually supposedly good for the markets itself. If you get a Biden win, we can actually see the markets probably go down a little bit because of the fact that some of the. Now, I'm actually staying very, very cautious. I really don't like how volatility is looking right now. and that's why I haven't been really as aggressive. But as we're seeing, there isn't a trend, an uptrend in volatility. So, if it does break the resistance of about 30, yeah, I think we could start seeing a major and a bigger sell-off in November. So we just need to get past these rough months right now. And of course, we had our first rough month, which is last month in September. And of course, like I said, we're not out of the woods yet. So I would actually bring this out further out. You can actually see that the VIX has actually dropped quite a bit substantially, and I believe that there could be more upside because of the fact that we're seeing higher highs and higher lows when it comes down to the VIX, where as soon as it bottomed out in about late August or so. So we just want to kind of look at this range of it right now and just watch that carefully, just to make sure that if it does fall down 25, below 25, then that could be a good thing. That we can be a little more comfortable. But if we get that to blow right through 30, yeah, you can definitely see more of a sell.
Looks like voice lost.
Steve, we don't hear you.
All right. So overall, I believe the market could continue to keep going higher. And now it's just a question of how it will end into the rest of the year. Now, traditionally, we always usually have what we call that Santa Claus rally. Because it's the election year this year, it's going to be really challenging. And I think that, overall, the chart still looks pretty good on the S&P 500 right now. And it still looks pretty healthy. We're still on track to be to move higher, but like I said, it really comes down to what's going to be happening with the volatility, and that's what we need to be cautious about. So other than that, I think that we covered a lot of the issues tonight. I don't know if you guys had any questions, or other than that, I probably just throw it back to you.
Can you on the volatility? I just wanted to give since you started this topic, can you just open up some of the things people can consider, especially gold and silver, and what do you see like in GLD and silver, and those who is looking to see if there are things happen during volatility, that industry people do take the money and put it in a gold or silver and safe haven, right? Yeah, if we can just give some of your perspective on that one.
Okay, sure. So guys, when it comes down to actually seeing what tracks gold the best, what we do is we actually look at the GLD, which is the spider, the gold spider shares. So it apparently plateaued and it peaked off around August or so, and ever since it's been trading in a channel or in a downtrend since. So. That has definitely something to be said. Like usually, when gold usually spikes, it usually tells that there's so much uncertainty. But right now, the precious metals have been going down, and until it breaks this upper channel, I think that right now I will probably stay a little bit on the bearish side when it comes down to gold, because right now it's bumping right against that 50-day moving average, and it really hasn't broke past that. So I don't really see that's going to probably be able to break the 180 level. So I would probably be a seller of gold because it already had it's had its run already. It's just trying to cool off. So we can actually just hold off on that. And usually gold is just pretty much used as almost like a safe haven play. So, people just use the gold when they just don't know what's going on. But because of the fact that when we know that the Feds are going to keep interest rates low until at least 2023, or at least keep unchanged, I don't think that people are actually going to be using gold or buying gold as an investment to hedge against inflation. So what they're going to do is there is no other asset class. Like for example, if you look at the banks, in your savings account that are giving you maybe like less than 0.5%, returns on your money, it doesn't make a sense. Or maybe like a CD doesn't give you 1%. So people are actually going to pour money and just dump money into stocks. And I think that's probably the same thing that's going on with gold. Now, I think as Mushi was mentioning about also with silver. So if we wanted to actually look at silver, we're actually going to look at SLV and actually track the silver shares. And usually silver usually outperforms gold. So if we're looking at how the trend looks on this also, actually looks pretty similar though. But it looked like the silver actually has a little more potential upside. So if I would actually choose between being either in silver or gold, I would probably go for silver. And of course, if the economy is improving, it actually does make sense to be in silver, because the fact is that a lot of and many things that we use, like for example, like cars and some of the other appliances, maybe like it could be like a refrigerator that actually uses silver. So silver actually has a usage for it. So that's why it would actually make sense to buy silver over gold if we do know and if we do see and find that we are actually going through a V-shaped recovery in the stock market, or maybe we call it like an L-shape on the street. So was there anything else that you wanted to talk about also, Mushi?
No, that's all. Thank you so much. Thank you, Steve. I appreciate it. I think these two, and as far as this one more, I know that since you have your technical chart, and I value, as you know, I value your technical analysis. Can you open up chart for Square SQ, and what do you see this coming week? I'm going to keep an eye on this one. Those who looking at to see if stimulus package comes in, this is a stock. Just keep an eye on that one.
Okay. Yeah. So Square has done very, very well though. And if there's actually two things that you can actually look at if you want to actually play the space. So if you're not a big fan of Square, you can actually also look at PayPal. I prefer PayPal in the long run, just a little more conservative. But Square has definitely made its run. It's definitely at what we call overbought levels right now. So if you do plan to get into Square, I would definitely wait for some type of pullback. And what I usually do is if I want to kind of just take this out, you could kind of see that Square has been flying. It's one of the high flyers, and it's making all-time highs. And that's something to be careful to look at. So if we do go into the second phase of coronavirus and a second wave, it does make sense to be into like companies like Square or maybe like a PayPal, because people don't want to have, they want to be contactless, and they don't want to catch a virus. And especially nowadays with the stats of over 1 million people around the world have already died because of COVID-19, and here in the United States, they're showing over 200,000 people already have already died in the U.S. And unfortunately, we do live in a country right now in the U.S. where a lot of people have a lot of pride. So it could be a downfall because of the fact that, when we look at the rest of the world, why is the rest of the world, like many of the Asian countries are, doing so well and getting the economy moving? Because, they have mandatory mask wearing, while here in the States, people have but you know what? It really all comes down and stems down to the leadership that we have. So when we look at President Trump, he was never really one to actually endorse wearing masks. But hopefully, his mentality changes because of the fact that he did catch the virus, but he was actually given a special cocktail drug by Regeneron, and he actually recovered from it. But in reality, most of us Americans, we would not be able to get that Regeneron drug if we were to catch this type of virus, and the recovery would be much slower for most of us. So, we got to be able to take care of ourselves. If the leadership and government is not endorsing these mask wearing or social distance, we need to be able to do that, and we need to pay our parts because of the fact that it's unfortunate that our country here in the United States is one of the worst when it comes down to enforcing it and doing our parts to kind of keep the coronavirus rates down. So I just think that, if we're going to be in this tough environment, then we need to kind of prepare for this, and we need to just kind of just capitalize on some of the stocks that are going to benefit from this. So, for example, if we would actually go for, like I said, your Square, if you want to go for maybe your PayPal, or maybe even if you want to get into like the gym space, we'll be talking about like Peloton. That just makes sense because a lot of the gyms that they're closing up, they can't stay open. And Peloton just makes sense because a lot of people can definitely exercise and work from home. So, we need to have what we call like this barbell effect, where we can actually just have some of our stocks that we have that are a coronavirus that can benefit in that, and we can have some stocks that can do well without any type of stimulus or and what we call being secular. The economy doesn't need to do well, but they can still keep doing very well, and for example, like your FANG stocks. So that's kind of like my take on I guess what comes down.
Thank you, Stephen. I think that's this is what I have. I think with the Square, I am bearish on that one. I have a short call on Square. Regardless, I have time. I think it can. I think it went up too high. The other thing, I know we cannot let you go without talking about Apple. You're the man of Apple. I see that some of the folks asked for it. So can you give your analysis on Apple, please?
Okay, great. Yeah, so I guess one of the last times when I did speak about Apple, there was at one time when I know Goldman Sachs, they actually downgraded Apple. And I was like, that's crazy. I mean, these guys, they don't know what they're talking about. So, Apple actually falls under the category of one of those type of FANG stocks. And they are actually planning to have somewhat of a new release of some of the new products like new phones and watches or so. And like I said, they are they're the best when it comes to that technology. And I'm very, very bullish when it comes down to Apple in the long run. And of course, we look at the charts over here. The charts still shows that it still does have quite a bit of some run to the upside. So the only headwinds that we have with Apple is the government. Now, the government actually says that they actually don't want big tech to thrive because they feel like that big tech is all monopolizing. They're cannibalizing just all the different areas, and it's giving a lot of competition for a lot of the smaller companies. For example, like you look at your Facebook, you look at your Google, Apple falls in that. Microsoft hasn't really fallen in that category yet, but overall, big tech is definitely under the Microsoft when it comes down to the government, and they definitely want to, if they had their ways, they would just break up a lot of these big companies, which could be a good thing if we are a shareholder of a lot of these stocks, because usually when we do have a breakup, what it does is that it actually unlocks a lot of share value. So that's actually a good thing. But overall, Apple has been a tremendous and a great performer for us, since the beginning of this year. It's moved up a lot. As you guys probably know, it actually did go for a 4-for-1 split. So the time to actually buy Apple was actually before the 4-for-1 split. So that's what gave me a reason to buy McCormick, because McCormick was actually going for a 2-for-1 split, and they actually haven't had this split for years, probably almost close to since about 2001. So it's been a long time since we've actually had a split. Now, as we probably know, a lot of companies have not had any splits for a long time. So thank goodness for Apple, it's the trailblazer, which actually started this run for splits again. So because of Apple, then we saw that Tesla went for a split, and guess what happened? After all these stocks that went for splits, their stock has ran up, and has actually increased a lot of shareholder value. So I'm actually happy to see that for us to have splits. The fact that a lot of us are actually very scared when it comes down to high price stock. But you know what? That should not be a reason for us to be scared to buy a stock because of a high stock price. Now, we can actually look at it for one of a couple of different reasons. So now, nowadays, we're very fortunate to be in a time where a lot of these brokerages are actually allowing us to get partial shares. So why not take advantage of that? If we know if a stock is a triple-digit stock or maybe $1,000 stock, why not buy it knowing that there's going to be growth in it? I'd rather be in something like that than something like a single-digit stock where there's just no certainty, there's no growth, and it's probably a lost value of money. So if if we want to look at something like Apple, I would definitely buy Apple, and especially, not even for like the short term, just, buy for the long term. But even if you couldn't even afford $100 worth of Apple, you can go to a lot of these different brokers, and they will allow you to buy partial shares, or maybe some like Charles Schwab is giving stock slices, or maybe like Robinhood is giving you partial shares, but you have to wait on the waiting list for those. But definitely, I'm very bullish on Apple. I've never really ever been bearish with Apple, and Apple is definitely one of the best stocks that you can probably ever own. Even it only pays out less than a 1% dividend right now. It's still worth it though. It's still worth it because you're getting the appreciation factor on top of the dividend that's probably paying you a lot more than your bank savings account. So definitely, that should definitely be on your list no matter what age you are in your life. And when it comes down to the end, Warren Buffett, he actually has a very, very big position in Apple, and he finally woke up and he owns it. So if Warren Buffett owns it, who am I to say, to go against one of the greatest investors of all time? So I think that we all should have some type of position in Apple. Okay. Did you have anything else on Mushi?
Yeah, that's one. Thank you so much, Steve. I think we appreciate your time. If you can stop sharing, I know I have something, and then close out, because I know we spend more than an hour. Would like to just stay close to it. Let me share my desktop. You guys see my desktop, right? Please just know that I know somebody just mentioned about PSTG stock. This is I do not know much about the company, but by looking at technical chart, it does look really good, and that is keep going higher and higher for a long time. And if I look at it a little short time, what's in the long term run, it looks like it has a room to go higher. But if I'm looking at a little short term, I just think it might pull back a little bit more. So some of the things you might see that if it goes below, it goes down around 17. If you see the range around 17 below, it's going up. If it goes above, right now it's around sitting there around 17 this price. If it goes 18 and 19, it has more room to grow. Okay, and then any news or market might stop this stock to go anyway the other direction. So now there are people asked me in private, that how do you connect with us? I wanted to share that you take a look at this website, or urbanhood.org. We are a nonprofit, as I mentioned earlier. When you come in, that I shared a link in the chat room. Please to take the link, or you can even hear it. When you come here in the middle, some of the things we show, what we offer. We have one of the special going. Any amount you donate to our cause, you not only get, first of all, during the donation is going to reward you with $120 of a class that we have. You're going to get any amount, you will have access to that class. You can attend our class on demand, class in person. All right. So the link is here, and also I shared the link in there. The other thing also you can get, while you are doing it, just send an email to contact us, urbanhood.org, on this website, and just say that you are interested to take 20% off any of the membership we offer. As you know that we use the money to support our charity, so membership details are sitting there. So you have just donate any amount and just say, hey, I want silver membership, I am gold membership. All the details about each membership, what are the differences? If you click on it, you'll see that you can go through it, and you see silver, gold, platinum has all the differences sitting there. But if you're new, you can start with as low as $25. I have people coming in and saying that, hey, we are charging too low. There are people, even we have paid subscription to support this community, where we are paying more than $300 a month to get the information and pass it to our community, right? But if you go individual, it's going to cost you a lot of money. And the services, some of the services is way more money we are doing it. But this money we generate, first we make sure that we have the right tools to help you to become a better trader, and then we share the information with the community. And then free daily stock tips. You click on this page, every day, we share the tips. You'll see what price we buy at support buying price, what the sell price, and if it goes down wrong, and take the loss, we put that detail. Today, tomorrow, so you're all going to get an email and showing that in the newsletter that after a long time that we have been working on it, the newsletter going to come out. Inside the newsletter, you are going to see that our track record last 4 or 5 months is over 70%, mostly over 70%. This month, our track record is over 80%. So that gives you an idea. And all the tickers we shared, and then tomorrow you're going to see that in the newsletter we are going to share a blog, and then at the bottom, if you will go on the website, you'll see the blog's links, and then you can read details about all those monthly stock tickers that we are sharing the track. So that's what I want to share. That please do not sit there just like wait that something gonna happen. You have to learn. You have to have a right community to help you so you can make informed decision for your investment. At the end, the money that we generate through this, our volunteers do not get paid. We are all doing it because we love what we do, and at the same time we love making money. We all do that, and at the same time we love sharing that with others. Okay, that's all I wanted to share. And I know that it's a Friday night, and not a Friday and a Sunday night. This coming week, looks a lot of things happen. Please watch this video. We're going to share the video also tomorrow. You will get in your mailbox the newsletter. Look out, a newsletter going to come out, especially from me, Mushi at urbanfoodalliance.org is my email ID. So please make sure that my email ID, Mushi at urbanfoodalliance.org, is whitelisted. So my mail goes to in your mailbox. It doesn't go in the junk. All right. That's all I want to share. And I wanted to thank everybody for the support. And I apologize. I did not have enough time to take a Q&A for now, but we'll make it up for you. And those who are the paid members, as usual, every day, midday we'll join 12:30. All the details we are going to be shared in the private room. All right. Thanks everyone, and have a good night. And I'll see you guys tomorrow. Stay green, peeps.
Thanks for watching. Visit our website, urbanhood.org, and join our community at meetup.com and look for financial freedom for you. Thank you, and we hope to see you soon.